Cool. Could I ask you guys to mute yourselves, please? Carlene, could you mute your phone?
Let me do it. Sorry.
That's okay.
Okay.
So, yeah, so I was like totally overwhelmed, didn't know where to turn, didn't know what to do. All I knew is I wanted to figure it out and make some money, because that's what brought me into trading. So I went through the academy, and then I started following certain educators, and I started by taking trades. And in the beginning, I was doing rather well, modestly, and then all of a sudden, I hit this streak. I started taking more trades than I was calling, and what I didn't understand is there's a lag time. Like my computer, my internet service was kind of stinky. So, and I was scalping. So by the time I was jumping on these calls, I had someone saying, look, we're going to take 10 pips, buy now. And by the time my little buy now button clicked, they were already 7 or 8 pips into the trade, and I would get stopped out on a reversal. So I stopped taking trades. And what I did is I went into demo. And when I talk to people and they talk about trading and learning, and you mention demo, it's like they don't want to hear it. How long do I have to stay in demo? I hear that all the time. I want to get started trading. How long do I have to stay in demo? Dude, demo is a magic sauce. Demo is the place you go to build your Forex muscles. I make the analogy, it's like the Forex gym. You go to work out in demo. Because until you've been in a trade that you wish you didn't get into, you're not a trader. I'd much rather be outside of a trade that I wish I was in than inside of a trade I wish I was out. You lose a whole lot of money. You drain your account. You drain your account real quick being on the wrong side of a trade. You're still going to kill him. So, you guys to mute yourselves, please.
Seriously? Bitch, you're gonna get a beating.
Okay, cool. Thank you, guys. When you turn on your mics, it's just going to give a whole bunch of feedback. So what I did was I started following the Harmonic scanner. Got this on my screen.
Let me know once you have everything ready.
Scanner.
On my calendar, and we'll make it.
What's good, Tommy? What's going on?
Okay.
Hey, girl, can I ask you to mute yourself? We have a whole bunch of people.
Okay.
Everything is good. I'm having some computer issues here that I'm going to work through real quick. Can you guys see my screen here for iMarkets Live?
No, sir.
No. Huh, all right.
Sorry.
Yeah, so it doesn't look like I can pull up this for whatever reason. Do you guys see a chart, or you see me?
What the hell? Oh.
We see you, sir.
You see me. Hey, Elliot. Okay, guys. Well, I was looking to go live on some charts, and for whatever reason, my computer's not letting me switch over to a chart. So what I'd like to do is talk right how scanner is used, and why we go through that and how we go through that. Let me just.
Rocket Mortgage by Quicken Loans. Push button, get mortgage. See?
Yeah, I need you guys to mute your.
I think of Rocket Mortgage. They created Rate Shield. It protects your rate while you find a new home. Big J gets it. So if rates go up.
Yeah, sorry guys, we have. Yes, I have 3 monitors, and I have my scanner on the monitor that, for whatever reason, is locked on my Zoom. Just give me a second here. Let me give this another shot. Otherwise, we're going to have to come up with a different strategy. Yeah, sorry, guys. So we're going to have a heart-to-heart, and I'm going to walk you through the scanner and how I use it and why I use it, and go from there. So when you go into the academy, the first thing that I did was I went in, I did the basics with Daisy Duncan, and it was really, really very helpful, but it did not prepare me to actually enter trades on my own. It actually prepared me very well to use the tools. So like the teacup is a fantastic strategy. The web analyzer is another fantastic strategy. And of course, the harmonic scanner. So the scanner is actually a scalping tool. And what it does is when you come in and you click on your broker to the left-hand side, it'll pull up charts. And if you guys, are you guys able to pull up your scanner as you're talking to me or no?
Yes, sir.
Okay, so if you guys get onto your harmonic scanner, I'm going to walk you through how I identify a trade. So if you're on your scanner, please give me a 1 in the chat so I know who I'm talking to. Just go into the chat and type in a 1. All right, Mildred, so I got you on the scanner. So it's me and you, girl. Everyone else is going to have to stay close. So when you go into your scanner, you'll see on the left-hand side, you have a list of brokers. I usually pick the little triangle one, Trader's Way. All right, Daniel, cool. So come over there and pick Trader's Way, and you're going to see it's a 15-minute chart, a 1 hour, 4 hour, and a day. I like to go with the longer time frames because it brings in the trend of how the trades are running. So you'll notice, Mildred, what's like the leading pair right now, the top one on like the 1 hour, 4 hour in the day? Mildred?
Oh, wait, I'm here. Wait. Let me unmute myself. Ah,
Yeah, I got you.
okay. I just want to share my chart, and you can guide me through if you'd like.
Yes, please.
Thank you. Okay. All right, go ahead. What do you want to look at, sir? The first one that came up right here is this one. Guide me through, sir.
Yeah, tell me what it says. Is it what's the pair?
The first pair that came up is GBP NZD, and it's on the 15-minute chart, and it is the butterfly.
Okay, perfect. So you're going to click on that, and what I normally would do is I would go to the upper left-hand corner and click a longer time frame, go to like the 1 hour or the 4 hour, look at it on the 4 hour, and you'll see how it's going to change the butterfly.
Okay.
You see how that happened?
Okay. Tommy, I'm trying to share my screen. Can you see my screen?
I cannot.
I did click the.
I can see your screen, Mildred. We can see it.
You guys can see it? Awesome.
Okay, fantastic. Oh, wait a minute. I might have this fixed. What do you guys see now? Do you see my chart?
I still see Mildred.
Mildred.
Okay, cool. We're working with Mildred. Mildred, you're a champion. I love you.
I love you too, Tom.
Okay. So, oh, wait, 1 second. Hold on. Give it another try. What do you guys see now?
Your screen. Whoop, whoop.
Your screen.
Praise the Lord.
Hallelujah.
Okay. So now, Mildred, what chart did you say that was? NZD JPY? Mildred, on the scanner.
I'm sorry. On the scanner, when I looked at the 1 hour time frame from the first broker that's on the left-hand side,
Yeah.
I believe it was from the 1 hour time frame, the 1 hour, 4 hour, and the 1 day.
Which pair?
The pair, I believe it was EUR JPY.
Okay, so that's Euro, EUR. Let me do this. Come over here. EUR JPY. All right. So now we have the pair. See, the harmonic scanner is basically a trading view chart. And now I'm on trading view. And Mildred, you see how the trace is the same as what you're looking at on the scanner? You see the lines here? You're on the 1 hour on Euro JPY, correct?
Correct.
Cool. So I have a different set of tools that I add on. Once I have the scanner shows me this. And the scanner is saying what? It's going to a buy or a sell, Mildred?
It's going into a sell.
Okay, awesome. So what Mildred is seeing is somewhere up here, there's going to be a stop limit. Then there's going to be an entry price down here. Then take profit 1, take profit 2, take profit 3. Correct, Mildred? Is that what you're seeing?
Correct.
Nice. So what you can do on your scanner is right over here, you have you have indicators and strategies. If you click that, you can add an additional indicator to your chart. So one of the things I like to start with is I like to start with a thing called a SAR, and that stands for stop and reverse. You see how these little crosses pulled up? So that's telling me when the stop and reverse is on the top above the price, it's going to go into a sell. When the SAR is on the bottom of the price, it's going to go into a buy. So already I have an additional indicator confirming what the scanner is telling me, because the scanner is telling me it's going to go into a sell. I have my SAR above my price, which tells me also it's going to go into a sell, right? And the thing that I also love to have on is I love to have volume. Let me get that out of there. Now, volume is just VOL. I go in to my indicators and strategies. I type in VOL, volume, and this 20 means it is taking the average of the last 20 candles, right? Volume 20. So here, the volume, does everybody see this? This is called the volume bar. This is the cause. This is the cause, and this is the effect. So this volume is how many players are in on that move. Then we have, this is how many players are in on this move. So has anyone ever heard of the fact that the markets are manipulated? Markets are manipulated, right? So they're manipulated by who? By brokers, by central bankers, by hedge fund managers. People can go in with huge lots, a lot size of 1,000. So each pip is a $10,000 move, right? So if you're going in with huge lot sizes, you can move. I think it takes a lot size of $1 million to move the market 1 pip. So if we have all this energy in on a buy, right? And the candle moved this much, then we have this much energy and the candle moved that much. Well, we have hardly any energy over here and the candle did squat. So perhaps in here we have some market manipulation. I'll get into that a little further on as we talk and as we see things develop. So right now we're on the 1 hour chart. And what I do over here is the first thing I do is I put up 3 screens on TradingView. And this one is set on 15 minutes. I have this one set on 60 minutes. And this one I have set on 4 hours. And here are the reasons why. So the last 1, 2, 3, 4, 5, 6 candles on a 4-hour chart is what this pair has done in the last day. So I'll come over here, I'll take a horizontal trend line, and I'll set my high, and I'll set a low. And I will set a low. So that tells me in the last 24 hours, the price has not been higher than 126,381 or lower than 125,464. And we're going to see how that plays a role. So I'll come like this, and I'll do my little OCD thing where I line up my lines nice and nice. Let me turn off some of this stuff that we're not talking about yet. And I'll turn off my Bollinger Bands. So what we're seeing is this is a 4-hour candle. And here we are 3 hours and 11 minutes into that 4-hour candle. Here, 1, 2, 3, 4, 1, 2, 3, 4. These 4 candles make up this candle. So I'm taking a close look at what's happening on this candle. So now we're on the 15-minute chart. And let me just turn this off for a second. So now look at what we can tell on our 15-minute chart where we are relative to the high and the low. So here's the high, here's the low for the last day, and my 15-minute candle is way up there. All right? So 1, 2, 3, 4, these 4 candles is this candle right here. And you can see, let me line this up a little better. Here, like this. I'm at the low of this candle, and look at where I am. That's where the low hit on that candle. Here's the high of the candle, and here's where the high was right here in the last 4 candles. So why is this important? Because what we're doing is we're identifying any kind of a trend on the longer time frames. I can come over here on my 4-hour and click it to a day. And you can see over the last several days, I've been trending in what direction? Am I buying or selling? I would be buying, right? This is an uptrend. So we know that this pair has been trending upward. But we also see that we're moving a little sideways. So let me come into a 15-minute environment. Here's a 15-minute environment. Here, we have a whole lot more candles. Now the cool thing about this is a session separator. So this is one session, another session, another session, so I can see the close of sessions, and I can see how these pairs travel in price. So the cool thing about TradingView, if you see my cursor, Japan has got a news announcement, and it's the housing starts and construction orders, and that's going to be at this particular time. So I was just talking earlier with Ann, who kind of got trapped in the middle of a trade, and news hit, and it threw her trade into the toilet. So in my particular trading plan, I do not trade the news. So if I'm going to enter something here, I want to be sure that I've collected my profit in, I have 9 bars. That's 9 candles, 9 15-minute candles I need to be out. So am I going to go and look for a 25 pip move in 9 candles? No. Can I grab 5 pips? Yeah. So knowing the news and your fundamentals is really important on what type of trade you're going to take and where you are in the market. So I'm going to switch gears real quick to a website called forexfactory.com. Write this down. forexfactory.com. If you haven't seen this, this is the go-to place for all the news announcements. And you can come over here and set what folders you want to look at. I look at red and orange folders. That's high and medium impact news. I don't care what the news is. I just want to know if it's going to be impactful, because that's going to upset my freaking apple cart. And Tommy don't like that. Tommy wants to know what's going on, right? So we can come over here and look at the days. Here's March 3rd. Here's March 1st over here. March 1st is a very big day because the first Friday of every month is non-farm payroll. Non-farm payroll usually moves the market a good 30 pips in about 15 to 20 seconds. So tomorrow morning at 8:30, you'll see the folder right here. Let me come up on my folder. My first, 8:30, US, where am I? US CAD, March. Where's my non-farm, man? Monday. So let me see. You can actually go into the folder and see what it and look and see what it's telling you. So this is the change in inflation adjusted, all that kind of stuff. I don't really care what they're actually going to tell me. I just care that's going to impact the market. So at 8:30 on Friday, you can go in there and pull up some US pairs. I highly recommend you do not trade, and you just watch what the market does. That's a whole strategy of trading non-farm payroll. It's called the 12 days of Christmas, because there are people who actually only make 12 trades a year. All they do is trade non-farm payroll, but they go in with lot sizes of 100. So they'll pull out on 6 pairs, 6 US pairs, they'll pull out $200,000 or $300,000 in a day, and they do that 12 times a year. I like that idea. These guys work pretty much 12 hours a year, and that's their full income. So I'll do a talk all about that specifically, but I want to get back to what we were talking about. So in TradingView, we have a news announcement. You go into Forex Factory, you see what the news is, you see when those announcements happen, so we don't upset our apple cart. So in our, how did I do that? Hold on. The gallery. Boy, I wish I could drive this platform better. I'm getting better at this every day. I want to bring up my scanner, but we'll do it from here. So the scanner pulled up the Euro JPY first sell. And what we could do is we go into our indicators and strategies, and we type in Bollinger Band, John Bollinger. And this is what a Bollinger Band looks like. A Bollinger Band is an average of all the highs, an average of all the lows, and a median. This is the moving average. It's smack dab in the middle. But I want to show you some really cool stuff on the way the price action interacts with the Bollinger Band. I'm going to shut off my volume now just to clear up some stuff. And if you come over here and you hit this, all that stuff goes away as well. So if we go back in time, you can see how the bands get fat. When the band has a lot of distance between, you're in a very volatile environment. And as the band narrows down, this time of day, the Tokyo channel, it's called, because the only market that's open is Tokyo, the band gets narrow because the price isn't moving a whole lot. So what we're doing here is, let's go back to, this is the 27th at 3 o'clock in the morning. And price was way down at the bottom of the band. You'll see that price actually closed outside of the low of the Bollinger Band. And what that typically means is when the price comes out of the Bollinger Band, it's going to come back. It's going to come back in, right? So what did it also do? It closed at what we call a flat bottom. That's when the closing price of one candle is equal to the opening price of another, and it goes in the other direction. So we have this flat bottom. Whenever you see a flat bottom, price is going to go up. When you see a flat top, price is going to come down. Flat bottom, it's going up. It's going down. The only thing we don't know is by how much. But that is what's going to happen. So here, these are dojis. A doji is total indecision. We don't know what the market is going to do. And you're going to see a lot of this around the moving average. And this is the way I read this chart. This is patience. Who has heard that patience pays? Right? If you're a trader, patience pays. Patience pays. Why? Because when you do this and you're patient, here's the move. Well, I'm patient. I'm patient. Here's the move. Let's be patient. Let's be patient. Boom. Here's the move. So I bring that up to say this. Our harmonic scanner is calling a sell. But what are we in? We're in patience. It's too early to get in. I'm not getting in yet. Euro JPY. Because right now, the harmonic scanner is calling for a sell, and my SAR is still saying buy. And I'm in the midline of my Bollinger Band. It's either going to go up or it's going to go down. So I could very well come up to the high of my Bollinger for 2 or 3 hours before my sell happens. And if I get into the sell now, I run the risk of stopping out and paying the market my money instead of me having the market get, instead of me getting paid by the market, right? So what I do is, this is my indicator to say that I'm being patient. Let me turn on something else. I actually use 2 SARs. And here are my settings. For the yellow SAR, I have it set at 0303.2. That's a slow acting SAR. And I have my red SAR is 0606.2, and that's a fast acting SAR. And what do I mean by that? You'll see back here how my red SAR flipped real quick, and my yellow SAR was still in a sell. So I'm in a sell here. My red and yellow were in agreement. I'm going down, sell, 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 sell. And what happened? My red SAR flipped over. My yellow SAR did not. To me, that's crying out patience. Be patient. Because I'm in consolidation now. I have my SAR is split. And I'm being patient. The SARs will start with a big gap, a huge gap on the price. And when they come and kiss the price, they're going to flip. So here, my harmonic scanner is telling me a sell. I have both my SARs on the buy side, but what are they doing? They're getting closer to my price. That's exactly what my harmonic scanner is telling me. It's going to be a sell. But I'm not jumping in yet. my harmonic scanner is telling me sell, 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 sell. I love you because that identified the trade for me. Took 90% of the work is done by that harmonic scanner. But now I'm fine tuning my entry, right? So when I see the next thing that's going to happen is my little red SAR is going to flip to the top. That's going to say sell, but I still have my little yellow guy on the bottom that's telling me be cautious. When my red and yellow flip to the top and I move off my moving average going towards my low, when my Bollinger starts expanding like this, the price is going to drop like a rock. And that's where I want to get in. So I am now just being patient if you're a scalper. Now, if you're an intraday trader, you can jump on this all day long. You can get in now. So what's the difference, Tommy? Well, the difference is when I'm a scalper, I'm setting a real close stop loss, 10 pips, right? If I am an intraday trader, I'm going to put a 50 pip stop loss. I'm going to look back in time. So if I'm going to enter this trade on intraday and I expect it to hit in New York, when New York opens in the morning, tomorrow morning, I'm going to look back here and see where my last high top is. And then I'm going to go and put my stop loss way up here above the wick. So I'm going to put in my stop loss at 126.32. Okay? So here's where the panic sets in. I'm going to come all the way up here for my stop loss. I'm setting, that's not so bad. I'm going to set a 20 pip stop loss. So in order for me to get stopped out, I have to retrace way up here over by the daily high and then come down. But I'm not that kind of trader. I don't do the long stuff. I do like 5 pips and I run like I stole them. So I'm going to come over here, right? 5 pips from there is like here. I love that. I love that all day long. I'm going to show you guys a really cool tool. Look at this. Buy stops, sell stops, buy limit, and sell limit. I'm like, bus stop? What's a bus stop? What do I want to do that? Huh. This is a perfect time of day to set a sell stop or a buy stop or a buy limit or a sell limit. Because, let me go back. I have my harmonic scanner calling a sell. So I don't have to click in on market execution and get in now. What I could do is I could look at take profit one. Take profit one is down here somewhere, right? So I can go in close to take profit one and do my sell stop. What that means is the price is here. I'm going to stop and get in when the market hits whatever I tell it. So my price is here. Say my take profit one is down here. I'm going to stop the market, jump in, and I'm going to write it down for 5 little low pips. I'm just going to take 5 pips because you know what? It's 99% sure I'm going to get my 5 pips and I'm going to be happy. I'm not all about what I missed on the move. I'm all about what I can take from the move. This is how retail traders get in trouble, right? They look at this and they say, oh man, oh my God, I missed that move, man, that move. That was 28 pips. I missed every one of them. No. Because this is what happened. I'm going to tell you right now, there was a retail trader that saw this flat top. They got to here, oh man, I don't know. Then they got to here, oh man, I don't know. They got to here, I don't know. They got to about here, they jumped in on a buy. And what did the market do? It went here, it reversed, and took their money away. This is all about the fear of missing out. Fear of missing out. I want to talk about entry for a little bit. I'm going to click down to the 5-minute chart just so I can go through what I call the halftime report. And I'm going to make this really big. Can you guys see these candles okay?
Yes.
Yeah? Okay, thanks. So, all right, Tommy, so when the heck do you get in, right? So there are times, see right now I have my I call this the long star, it's just what I call it, but this one acts slowly, this one acts fast. I still have it split. Every 5 minutes, I get a new candle. At the 2-minute and 30-second mark, that is the half time of the candle. At the 2-minute and 30-second mark, what I want to look at is I want to look at the price relative to the last candle. So now we're at 153. So right here, I was lower than the halfway part of this candle. So the odds are this candle is going to close lower than this candle. And as I'm saying this, it's making a liar out of me, but that's all good because I have one SAR on top and one SAR on the bottom, and I am in patience, patientia. I'm not playing this game. Patience, patience, patience. When you have patience, you get paid. Here's the patience, here's the pay, right? So now, this is going to close out at 1 whatever. So what it just formed is, when this closes out another 55 seconds, if I'm still here, it's closing out as a flat bottom. So that tells me highest probability is that the very next candle is going to go up. Here's a flat top, it went down. Flat bottom, it went up. It went all the way up to here. So if we have people that trade naked charts, let me show you. Now, it doesn't mean you got to be naked. It's just the chart's naked. Let me get to a naked chart. Turn up my other SAR. Where's my red SAR? So all they see is this. That's all they're looking at. They're looking at tops and bottoms. So now, what did I say? Flat bottom. The prediction is this guy is going to close above. So at the halftime report, at 2 minutes and 30 seconds, we're going to see where this guy is. And then it's going to give us an indicator on where the price is going. Now, this is not the time of day to take 5 pips, even on a naked chart, because we're in the Tokyo channel. Tokyo channel is when just the Tokyo market is open. We make money on the change in price, right? So if the price stays the same and there's no motion, there's no delta. We can't keep the change because nothing moved. We're all about, getting paid our, for lack of a better term, our commission on the move. So if the price isn't moving, there's nothing to be paid. So I do not trade a consolidating market, or what I call patience. This is my patience. Now, is there money to be made? Yeah. There are people, I'm moving here from here, this is a 4 pip. From here to here is even more than that. But I don't want to play that game. I don't want to do that at all. I'm going to see what this does at my halftime report, and then I'm going to show you some other cool stuff with another volume indicator. Now, what I do is, because the scanner is on a TradingView platform, I actually bring these indicators and lay them right over the scanner, and you can see that real time. So as I'm watching this happen, I'm going to pull in a thing called session volume. You guys are going to freak out. I know I freaked out when I saw this. I'm going to pull it really big. So let's just talk about what this is for a minute. This is actually actual spread. This is the VIG. This is what we pay the broker. We're paying them 2 pipettes whenever we get in on any. Now it's 3. When you see this number increasing, that means there's going to be a move. They're about to move the market. So 27,000 orders are in on a sell. 32,000 orders are in at a buy. How cool is that? And this is the actual participation of the people, of the orders. So, and what I do is I take this so I remember, and I'll put it right over here. This is the buy side. These numbers are the buy side, and these numbers are the sell side. And you'll notice how these 2 numbers are really, really close at this price. And the candles are showing that, right? The candles are showing that. I don't have a lot of movement here. So you're going to see there's going to be times when one side or the other is going to be a 0. So if I see nobody is selling, if all of these were, when no one is buying, and I only have numbers on the sell side, the price is going to drop. Okay, so now what did we say? We gave our prediction, and the market proved us flat-ass wrong. Pardon my language. But here, we said there was going to be a flat bottom. Price was going to go up. Yes, it did. Price went up. It went up to a flat top on the very next 5-minute candle and went flying down. So could we have made a profit here? No. The market isn't moving enough. The market is too flat. We're in consolidation. We're in patience. Stay the heck out. Here we are in our 15-minute story, right? So can we trade flat tops and flat bottoms on 15 minutes? Well, yeah, you can. Is it a good time to trade? No. What does Mr. Bollinger tell me? I got my Bollinger Bands on, and my band is really, really narrow. So I stay the heck out. Okay? So here's another thing about retail traders and starting out in the trading world. I felt as though every minute I was on a session, I had to be inside of a trade. It was like, man, I'm missing everything. I got to be in a trade. And the fact of the matter is, a good trader spends most of his time outside of a trade. You will spend 95% outside of a trade because you're looking for the trade to enter. You don't want to ride the market. The longer your money is in the market, the longer it's at risk. All these beautiful tools, the scanner is an unfair advantage. You know, the academy is a phenomenal educational tool, but there is inherent risks to trading. If someone tells you, oh, come study with me, there's no problem, I got you covered, run. Don't walk to the exit. Trading is risky. What we do is we minimize the risk with proper risk management, proper usage of tools, applying tools in an appropriate way, understanding what the market is telling us, and then we enter the trade. I've been telling you here for, I don't know how long I'm on, for 45 minutes, don't get in the trade. Because I just want to be, I want to be in on this candle. That's the candle I'm looking for. I want to figure this out. Now, when you're in this candle and you're in for, let's just measure this. I take my guy here and I'm measuring my pips. This is a little old 10 pip move. People laugh at 10 pip moves. Ah, you got 10 pips. Yeah, fine. But my lot size was 100. So when you go in on a lot size of 100, that pays $1,000 a pip. Are you okay with me on a 10 pip move that took 15, what did it take? This is a 15-minute candle. So from here to here, on a 100 pip lot size, somebody made $10,000 in 15 minutes. Are you okay with that? Would you rather spend 95% of your time figuring out how to build up your account so you can trade in lot sizes of 100? Or you want to get frustrated trading in lots of like micro lots and losing $300 or $400 at a time? Get your butts in demo and stay there. I have an active live account and I have an active demo account. You don't graduate from demo to active. You use them both. I'm talking about some strategies and some tools you might not have ever seen before. You might not have ever used a scanner before. You do it in demo. And you do it in demo until you double or triple your demo account. Why? Because you have to have that visceral feel. You have to be engaged in the market, and you have to learn how to lose $1,000. You have to learn what that feels like. Because the moment you disconnect your emotion, your emotional attachment to money, when you sever that, and when this just becomes an exercise, a math exercise, an exercise of reading the tools and reading the charts, when it's not your car payment, when it's not your kid's lunch money, don't ever trade with money that you can't lose. When you go put money in your trading account, it's like you're riding down I-95 at 70 miles an hour and you take that $1,000 and throw it out the window. The money's gone. That money is gone to me. That money is dead to me. Now when I go into a trade, I'm trading on the chart. I'm not trading on Benjamin Franklin. I'm looking at my charts. If I do the right things on the charts, Benjamin Franklin's going to come. Does everyone feel what I'm saying? You have to get your perspective right. Right now, I spend more time on managing my mind than managing my trade. Because there's been times I made the right call. I knew I was going to go into a sell. I knew I was jumping in on a sell. And I knew there was going to be a retracement. But that retracement for me was $1,100. I'm like, that's $1,100, man. I better cut my losses. And I punched out at an $1,100 loss. And then what happened? 2 candles later, it dropped 75 pips. So intellectually, I had it right. Emotionally, I got it wrong. Emotionally, I got it wrong. It's emotion. So you need to drive those emotions in demo. I want you to feel the panic of, oh, hey, it's $1,100. Let them be 1,100 demo bucks and stay in the trade and stick to your conviction and stick to your chart and watch that thing come back and you feel what I'm saying? When those types of occurrences become second nature, then you're ready to go live because you would have doubled or tripled your demo account. I love to talk about Ralph Macchio in The Karate Kid, right? He wanted to learn karate. And what did Mr. Miyagi have him doing? Oh, you want to learn karate? Okay, go wax my car. Wax on and wax off, right? Oh, you want karate? Oh, go paint the fence. Paint the fence. Oh, you sand the floor, right? And what he was teaching him was he was teaching Macchio the muscle memory that's required to react in karate. That's what demo does. Demo teaches you the muscle memory on how to react when a chart, something comes up on a chart. I got to manage this trade. Oh, I've seen that 100 times. Now I know what to do. But you learned it in freaking demo. I want you to blow your demo account 5 times. Blow it. You know the beautiful thing about blowing a demo account? They give you another one. And you know what it costs you? Nothing. But now the skills that are required to run a successful demo account, when you triple your demo account, dude, you have any idea what's about to happen? You're going to put $100 in your trading account and you're just going to grow it. Because in the beginning, I had to learn the hard way. I went in, I was doing good, I started taking some trades, I lost $5,000. I'm like, how the hell that happened? I know what I'm doing. But what I didn't know is what I didn't know. I stayed in demo for like 2 months. Like, I got this. It's cool. I've seen just about everything. I didn't see nothing. I didn't see my $5,000 loss coming. So I grabbed my $5,000 loss and I said, well, I either quit or I figure it out. I'm too freaking Italian to quit anything. I eat pizza right down to the crust. At the last bite, I'm doing it all, right? I lick the bowl. I want it all. So I started out with $100 in a disciplined fashion after being in demo for months, 3 or 4 months in demo, put $100 in there and grew that account to over 30,000. Now, I'm not saying that to pat me on the back. That's a very modest accomplishment in the world of trading. But the reason why I'm telling you this is because you cannot learn this skill in a live account. It's just not possible. It has to be done in demo. Now, there are people who have a good run. They start in demo, they're taking trades, they're using the scanner, they're using the teacup. We have people in the IML Academy that know nothing other than the IML tools, and they're doing fine. I just can't do that. My mind doesn't work that way. I need to know what makes the candle move. So my thing is, the more I know about this market, the more I know how it moves, the better prepared I am to react to whatever it might throw at me, right? So the other thing I did is I only traded one pair. And that in the world of trading is sacrilege. So why would you only trade one pair? Why? Because I wanted to narrow down my variables. And I picked the most difficult pair to master. I picked, pardon me, GBP JPY. That's the British pound and the Japanese yen. It is the most volatile pair in the market, but it also pays the most, right? There are people who only trade that pair, like me, who make 7 and 8 figures a year. Fine. Now I can tell you when I go GJ, I can tell you when it's about to sneeze. And all I want to do is grab 5 pips. Why? Because I'm building my account size to where I can trade in less of 1,000. Eleanor, I need you to mute yourself, girl.
Sorry.
That's okay. So, yeah, my goal is to trade in lot sizes of 1,000. That's just my goal. I'm not putting that on you. But realize, if I'm trading in lot sizes of 1,000, I get paid $10,000 a pip. So on a 5 pip move, are you okay with $50,000 in 5 minutes? Now, I'm a busy guy. I have things to do with my day. So I can wake up at 5 o'clock. I can put my lot size down of 1,000. 11 or 12 minutes later, I can go back to bed. Who likes that schedule? But you're never going to get there unless you take your lumps in demo, right? So now I'm trading in standard lots, 4 or 5 standard lots. But I'm having runs of 30 or 40 trades, successful trades in a row before I have a loss. And you're going to lose. But now, after being in demo for so long, I understand that the loss is a part of the game, and I understand what a loss looks like. So I jump out of a trade as quickly as I jump into a trade. I say that you jump out of a trade that's going against you. Trade's going against you, I'm jumping out. 10 pips, I'm out. Why 10 pips and out on a scalp? Because I only need 2 successful trades to make up my loss. Do you think you can get 2 wins in a session after you've had a loss? Odds are, right? I don't want to drop 50 pips and have to get 10 wins to make up for it. So that's my scalping strategy. Another thing that I do is 3 wins in a row. It's not uncommon to have 3 wins in a row if you're scalping for 5 pips in one session. 3 wins in a row, I get up and I leave for at least 1 or 2 candles. It resets my brain. It checks me. It's like, oh man, I'm on a lucky streak. No. There's no luck. There is no luck. There's no lucky streak. I get up and I leave. If I have 3 losses in a row on any session, I shut my computer off for the day. I'm done. And I do other things to reset my thinking. And I have that written in my written trading plan. Everyone who's been through the iMarkets Live Academy understands that they talk about having a written trading plan. Because when you're in the middle of a trade and your mind goes blank and your account is red for $1,000 and you're not thinking, you could look down in your written trading plan and it'll give you the steps you need to take to recover from your loss. My trading plan doesn't allow me to have that great of a loss anymore because I'm taking 5 pips and my stop loss is set at 10. This is why I wouldn't jump in onto this scanner right now. I don't want to jump into the scanner before I'm close to take profit 1 because I'm going to ride from take profit 1 to take profit 2. I'm going to be on the safe side. Does everybody understand what I'm talking about? Now, that's just me and my trading philosophy. So we're on this deal for about an hour, and I've been running my mouth pretty good. And Mildred, I love you. Thank you for your assist with my stuff here. If anyone has a question that I have covered or not covered, who wants to, shout out and ask me something, just unmute your mic and fire away, and I'll see if we can tie it up with answering some questions.
I have a question.
Yes, my dear Mildred.
Okay. Can you go back to that feature where you saw you threw something marvelous up that had just
the session volume?
Yes, the not only the session volume, right? But like the strength of the trades and when people were in. So it was all these lines, all these numbers going down.
Okay.
What was that?
That's called volume. This is just your standard volume. Just go into your tools, go up over here to indicators, and pull out volume.
Volume.
And the volume bars will pop on. And then there's session volume. That you're going to type in VPSV for session volume, and that analyzes all the buys and sells at the particular price.
Awesome.
Okay. Anybody else?
Thank you.
Going once, going twice. Well, I want to thank you for your time and your attention. And believe me when I tell you, the purpose of spending this hour with you guys is really just to let you know that if you stay the course, use the tools, find a strategy, develop a trading plan, and use proper risk management, the world is really, you're basically creating your own bank. And I'm going to close it out with this. Right now, if you went to pull money out of your bank, it's not accessible to you until 9 o'clock in the morning when the bank's open. Does everybody realize that? Do you know why that's the case? Because the bank has your money on the foreign exchange making money for them. Your bank account is empty. It's at zero. The number says 28,400, whatever it says, but you don't access that money because the money is gone to you. The money is on the foreign exchange earning money for the bank. There are professional traders who are using this trading view chart with the tools that I just showed you to use your money to make money for the bank. So what are we doing? We are becoming our own banker. So now I can go into my trading view platform from my IML Academy and learn my skills, and I go into my brokerage account and I can trade right alongside with the banks, with the commercial banks, with the central banks, with the hedge fund managers. And now I'm playing the game that they're playing against me with them. I'm riding their coattails. And now in the morning, when I put in a trade, if I'm trading on a long account, a long move, like an intraday trade, and I wake up to $3,000 or $4,000 in profit, I just giggle and roll over. I go back to sleep for an hour, right? So when you build up your account to where you can make trades in standard lots or lots of 10, lots of 100, realize that basically retires you. That basically retires you. If you can pull out 10 pips every week, every day for 200, that's 280, 2,800 pips. Pull out 2,800 pips at a lot size of 1,000, a lot size of 100. It's $280,000. Is there anyone on here who will be upset with $280,000? No. So let's build up our accounts to where we can trade in lot sizes of 100. Do you feel me? So we're using the same financial instruments that banks use in the same financial arena that they play, and we are learning their strategies. So we are, in effect, becoming our own personal bank. And I want to leave you with this, and then we're out. I want you all to write this down, please. It's called The Secret of Oz. Let me come over here and see if I got Secret of Oz. Here it is on YouTube, right? YouTube, and right here, The Secret of Oz, winner 2010 Best Documentary. Why am I sending you there? Because The Secret of Oz tells you all about how money is made, where it comes from, what it is, how it works, why it doesn't work. Because we'll go to college, we go to high school, go get a good job, get a good education, go to earn money. What's money? Nobody knows what money is. Take 2 hours out of your life, jump on that documentary, and then this whole banking system, foreign exchange is going to become much more clear. You're going to understand the arena in which we're playing. So with that, I'm going to punch out. I'm going to thank you all for your time. I hope one or two of these words have been helpful. We'll be back next Wednesday night to continue. And we're out. Love you all. Ciao.
Thank you, Tommy. Good night. Good night, everybody.
Good night.
That's willing to help you. And you don't.
Tommy, thank you so much. I have a similar story like yours. I
Yeah.
didn't do anything. I wasn't brave enough, but I'm back on board.
And listen, Carlene, you know how to get a hold of me. If there's anything you ever need,
I'm going to get hold of you. Trust me, I'm going to utilize you because you give me courage tonight, really.
Yeah, we're all in the same boat. I just paddled a little longer. We're all in the same boat. We all have the same tools. We all have the same academy. We all have the same leverage. We just need to, focus our attention, learn the skills, and master it in demo. The secret is demo. That's your secret weapon, demo.
I'm gonna listen to you. I'm gonna go in demo. I didn't do that. I went straight in. I lose it all, and then I got brain dead because I felt sorry for myself and I was mourning.
Okay, well, let me tell you something, Carlene. I want to tell you something. 90% of retail traders lose 90% of their account in the first 90 days. And it's designed that way. It is actually designed that way to take your money. So believe me, you have just been a victim of the system. So now we're going to fight back.
Yes, we are.
Yeah, we're going to fight back and we're going to go crush stuff. So I appreciate your time. Thanks for being here. Thanks for the kind words.
Thank you.
Very welcome. Okay, guys. Good night. Ciao.